Hello everybody. So we got a major aftermarket surprise. The US debt is downgraded. The US is officially not AAA rated anymore at the credit agencies. This was the news that was released about, 45 minutes after the market close. And now all of the credit agencies have the US rated below a AAA. And, this happens, I suppose, at a very opportune time, because this is happening at a point where, during the past 5 years, a lot of short-term debt was issued, and a lot of short-term debt needs to be refinanced. And it's about, I don't follow that too closely, but it's about $9 trillion worth of debt that needs to be refinanced this year. It's actually much more if you look at the next 3 years. And it's okay, right? $9 trillion to refinance. Rates are very low. They're just as low as in 2021, right? When you issue debt for 5 years in 21, okay, you got to refinance just about now or next year, and it's okay, right? We're not going to see a quadrupling in the interest rates, right? We can totally afford an increase in the U.S. borrowing costs, right? And I'm being facetious here. Of course, that's going to be a major problem because we're refinancing at a much higher rate, and this is like kind of a worst time for this because what happens when the debt gets downgraded, right? Interest rates go up. When debt is considered less credit worthy, creditors are asking for a higher rate, and so I think treasuries are going to drop. Some people talk about foreign currencies helping, but logically on a first level of analysis, treasuries are going to drop further, driving rates up. And to that I will say the Fed needs to drop rates as soon as possible, preferably 3 years ago. But the problem is that we have an unelected official. I will keep saying that, an unelected official who doesn't do economics anymore. He does politics, and so he doesn't like the current administration because of Twitter exchanges and Twitter spats, and because of that, it's possible that he keeps the rate steady until 2026. Like, it's entirely possible. I've been thinking the rates would go down for the past 3 years. They haven't gone down at all. So if there's nothing you can do, the rates are so high. And there's a mountain of debt, $9 trillion, that the U.S. needs to refi in 2025, some in 26, right? That got so much more expensive. And what about the risk-free rate, right? It's the term that's used all over finance and all over portfolio theory, even in the Black-Scholes formula. Everything is based off the risk-free rate. And as the followers of my channel know, I've long laughed about the risk-free rate because I don't think it's risk-free when every other year you have a fight in Congress about raising the debt ceiling. To me, that's my main issue, is this fight in Congress about, every other year you have this fight in Congress. They don't want to raise the debt ceiling. Imagine a company's board and top management team. Imagine every other year they meet and they say, we're not going to pay our debt. What would you think would happen to their debt? And of course, they've always raised the ceiling, but how do you know they're always going to do that? We have proponents of MMT, which are, anyways, I'm not going to go there, but you have some very, very extreme left-leaning people out there who are like, okay, well, we can just cancel the debt. We can print a platinum coin for $1 trillion. Anyways, as Gorklan Rust said, was it a year and a half ago, on a conference call? I still remember this glorious moment when you have Gorklan Rust, who's actually Tesla, of course, is one of the biggest holders of Bitcoin. I think that's worthy. That's the biggest non-Bitcoin company owning Bitcoin. No non-Bitcoin company owns more Bitcoin than Tesla. Actually, we still forget about that, but they have a huge stack of Bitcoin. And you have Gorklan Rust, who said, we'll see how risk-free it really is. Aha. Laughing with the CFO on the call, right? Talking about the cash of Tesla being parked with government bonds, right? That's why Tesla has Bitcoin. They know that. And that's why a lot of companies are moving to Bitcoin. They're shifting their treasuries from bonds to Bitcoin. Like, imagine if you had hundreds of millions of dollars in formerly AAA rated government bonds right now. What's going to be the haircut on these bonds on Monday? Like, how much are they going to be down? Sure, bonds don't move that starkly, but still over the long run, this is going to matter. Bond prices, they drop when they get downgraded, and that's going to impact a lot of things, a lot of people. What's going to be the impact of this? Well, investors will be demanding higher rates from U.S. Treasuries. If investors demand higher rates, logically, existing Treasuries, which are held by a bunch of people, which are held by countries, which are held on a bunch of balance sheet, these Treasuries will drop in price. So the government bonds value will drop in price. And a bigger share of the tax money, if you have to refinance $9 trillion at a higher rate, a bigger share of the tax money will go into paying that interest. Interest on the debt is already the first government expense. That's going to be an even bigger one going forward. Mortgages, credit cards, all sorts of loans are still benchmarked on the risk, the quote-unquote risk-free rate. The government debt, the government rate is what a lot of things in the economy is priced. So if you were hoping for mortgages to go down, that is not very good for mortgages, this thing. It's actually very problematic because they're not going down. Insurance is likely to keep going up across the board. Why? Because most insurance companies found it was a good idea to invest their float into bonds. Some insurance companies have trillions of bonds. Even if government bonds don't move that much, imagine the losses if you have $1 trillion in bonds as an insurance company. Older folks also are retiring less rich or are postponing retirement. This is because oftentimes if you have a full-time job, you're busy, you just listen to the advisor, and the advisor say, oh yeah, it's 1980, and the advisor say, oh yeah, I'm going to put you in a target 2025 retirement fund. And these people are sitting in a bunch of bonds. Using, variation of a 60-40 rule, which is nonsense, having a bunch of bonds like that. Anyways, that's just my take, no financial advice. This is just an opinion. But still, this is nuts. Okay, who else do you want to know who else owns bonds? And who else may be in a deficit sooner than most think? Social Security. Social Security is all in bonds, right? Think about all the pension funds that are only in bonds. And let's also hope that no banks are still levered up on bonds, on debt, right? That was the Silicon Valley Bank collapse. Okay, the Fed did stealth quantitative easing with the BTFP program. They could reinitiate that at a bigger scale if anything were to happen. But, the Fed could have to intervene in this. We win when the interest rates drop. I understand the concerns of people who talk about inflation, but technology takes care of inflation. We are entering a very deflationary world because of technology. It's going to be so deflationary because of tech. I fundamentally believe in this. And so the rates dropping is not necessarily going to mean the CPI is going up, because of the technology making the prices go down a lot. And, we all have to lose, and we have to lose. Why do we all have to lose? Because the current unelected official at the Fed doesn't like the person who got elected as president of the United States. That's, the simplest explanation is usually the correct explanation. That's the simplest explanation I can use as to why the rates are not dropped ASAP. The rates need to be dropped 3 years ago. This is crazy. We are driving into a wall. I know my macro videos don't get a lot of views. I understand macro is annoying, and it's one of the most opinionated sectors. Clearly, I can't talk about macro without talking about my opinions, and so this is not as straightforward as a stock that's undervalued. That's just the point. That's just the way it is. Anyways, meanwhile, you have MSTR issuing debt like Strike and Strife, who are preferred equities, by the way, who are debt. And in my view, they trade at steep discount. They trade as junk debt. They're considered junk debt. But the debt of MicroStrategy, for example, and I could throw in there a bunch of BTC treasury companies, right? Not just MicroStrategy, right? I could put Mara's debt in there, right? It's backed by a bunch of Bitcoin, the second largest holding of Bitcoin. I could put other instruments in there, and I'm sure a lot of treasury companies are going to issue similar debt instruments. They're backed by Bitcoin. They're over collateralized. That debt, if you look at some of the tranches of convertible debt of MSTR, some of them are over collateralized by 50 times, i.e. $1 billion borrowed, you have more than $50 billion. That's next in line to be touched if MSTR were not to be able to pay the debt, right? right? And unfortunately, the government debt is backed. Yeah, it's backed by a money printer. I agree. Moody's agree. I'm sure everybody agrees the government debt is backed by a money printer. The problem is that it's an imperfectly accessible money printer. Every 2 years, you have a dance in Congress about raising the debt ceiling, and then you have very scary propositions about the modern monetary proponents, which are the descendant of Keynes, which believe we should just print a bunch of money and not care anyways. It's, this is imperfectly accessible. Like I said, imagine the board discussing every other year, oh yeah, we're not going to pay the debt. Oh yeah, we're not going to raise the debt ceiling. We're going to furlough everybody. We're going to fire everybody because we can't pay the debt. Anyways, make no mistake, this is very bullish for hard asset. This is bullish for your Bitcoin. This is bullish for your house. This is bullish for your land. This is bullish for your companies that have a rare competitive position. Your companies that are elite, this is bullish for these, because the more we wait, the more aggressive the QE is going to have to be. And I believe the QE will be aggressive. And make no mistake, in 2026, there will be a new Fed chair. And that Fed chair is going to be chosen by the current president of the United States. And the person chosen will likely be all about QE. So that's coming. The key, as I always say, is don't get wiped out in the meantime, right? Don't do leverage. Don't do anything stupid. Don't get wiped out. But this will come, maybe in 2026. Anyways, the conclusion is Bitcoin is down right now. Why is Bitcoin down? Because most of the world has entered the weekend, which means that TradFi is closed on the weekend. In fact, the US markets are about to close right now. Traders are home. Money managers went home for the day, right? So the only thing you can sell for the rest of the world is Bitcoin. And that's why Bitcoin is dropping. But I think it's noteworthy that Bitcoin, since the news, right, is only dropping, if you look, Bitcoin is only dropping since the news 0.5%. It went from like 103.95 to 103.499. 0.5% is the drop in Bitcoin. The Nasdaq, on the other hand, is dropping 1% since the release of this news. So again, risk off is happening. MSTR's junk. It's a complete joke, right? I mean, it's like in my view, the interest rates need to drop ASAP, but they likely won't. So we have to sit tight until 2026. This was not investment advice, not financial advice, just entertainment. Hoping you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.